The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 14th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We'll go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in right now, 877-927-6648. If you can't get to the phone, you can always send me an email, steve@tfnn.com. Inside that heading, just put radio show question, and of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magnificent and magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 151 points at 22,009. The S&P up 25 points at trading out at 2466. NASDAQ 100, Russell 2000, both up 1 3/10%, 75 and 17 points respectively. Semiconductor index up over 2%. That's trading out at 1090. If we take a look at the spot volatility index, down minus 19%. That's kind of interesting. We'll certainly take a look at that. I'll have to pull open one of my other charts out here. Gold is off $3. It's trading out at $12.90. Silver's up 6 pennies. Light sweet crude back 90 cents, down nearly 2%. To the upside, leading the charge dollar-wise, it's Bitcoin. GBTC, the ticker symbol, up 17% or $110 out there. Intuitive Surgical up $22. Priceline up 16. Amazon up 14. To the downside, well, individual stock-wise, it's going to be AutoZone off about $9. Middle B Corp down 4. Mercado Libre off 3. Energy 21. Gulf down 270. Chipotle off a couple of points. Of course, I want to look at what you want to look at. Let's first start where we really left off on Friday, because what you and I know is that if we take all the emotion between our two ears out of the game and we just look for patterns, the patterns will go ahead and they'll keep us on the right side of the market. At least the market communicates to you and I all different time frames, but uses the same set of tools. Now, when the market was bottoming on Friday, as we discussed, there were certain patterns that were present. And what we were looking for when you and I last spoke was we were looking for price inside the NQ, because that had the strongest pattern during the day. We were looking for price and Stevie's red line to come together as one, as they say. Now, the reason that we were looking for that was because as soon as that price oscillator down here in the bottom portion of our screen got to zero, we knew that was an indication that these two were going to connect. It typically means the market at that stage is going to start moving sideways. And it's really the way that price and that red line work with each other that communicates to you and I what the next move is. Well, at about the exact time frame, not exact, but at about 15:30. So what's that make it? 3:30 in the afternoon. I think I happened to be just right in front of my computer, so I went ahead and posted that message in the system. Was we saw a test and rejection of that line. Now, what does that mean? That means then that we have a rising price oscillator above zero. Now, you prefer to not necessarily see that on a Friday. On the other hand, let's say you were short the market. Let's say that you were short the market and you saw that test and rejection. The question would be, would you hold that short position over the weekend if you were we'll call it a shorter term style type trader? And the answer is absolutely not, because you just had as soon, and we were talking when we were on the show at 1 o'clock, this test didn't take place until 3:30. You would sit there, you would wait to see that test, and as soon as you got that rejection, you knew the market was communicating to you at that stage that it wanted to move higher. Now, this weekend, with all the activity and the flurry that's out there, anything could have happened. But again, if we take all that emotional stuff out of our mind and we just look at the stock chart out here, you got that bullish message, which we've just simply seen continue throughout the market open last night at 6 o'clock in the equity futures contract, too. Really where we're at right now, 5907.50 inside of the NQ. That was on the 30-minute time frame out here. And you and I love to go from a 30 to a 2-hour. To a 5-hour, to the daily chart out here. I just put the 2-hour out of my chart on my screen here. I haven't looked at it, but here's what we do know, right? So here's a nice set of patterns, right? You've got the about 1 to 1.618, A to B equals CD to the downside. That pattern completed here with that big old bullish engulfing candle. We have price moving lower, doing less relative energy. That completed with that bullish engulfing candle. You have from the high to the low, a 7th wave move. Stevie Wonder singing in the key of G. I mean, these are just the simplest patterns. Now, I recognize it's simpler for me because I have been using them for so long and have perfected them, but actually it makes it easy for you too if you have not mastered these patterns out here, because you can do it. And I can help you, condense just simply decades into days or weeks out there by just having you focus on what you need to focus on. In this case here, what we can see on the 2-hour chart is we're right now at that stage where its price oscillator has just hit the 0 level. Same thing ought to play out like this. At some point in time, we're going to see price and the red line connect. Now, it may not happen during this afternoon, can easily happen overnight. And on this time frame chart, the same outcome. If price, in fact, starts to dive below the red line, wherever that, and you're at 59.08, my red line's at 58.63. So we've got a pretty decent price spread there. But these two will connect. Did it on the 30? It's going to do it on the 2-hour chart here for the NQ. Does that mean if you were long that you would sell now? Heavens to Betsy, no. There's no signal that you would do that. Real resistance is probably another 10 points to the north of where we're at. Just taking a look at this chart, we can go look at other resistance levels as well. Now, the interesting thing here today inside the NQ is really going to be on the daily chart. Can it overtake Stevie's red line on the daily chart? Right now, it's priced at 59.15. It's only another 7 points to the upside. That's nothing. But, folks, if you close below that, that's a pretty bullish message inside the NQ. Would not be surprised to see it go take out its highs if, in fact, this occurs. Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 144. S&P is up 25 points as we speak right now. Now, the spot volatility index off 19% as we speak right now. I don't know what the end of the day, one-day rate of change is going to be, but I've gone ahead and I've put in a green arrow, the Green Hornet out here. And the reason that we put in the Green Hornet, just as you and I, we pay attention to those one-day rates of change greater than a positive 2%. Those are the blue lines on my screen out here. We also pay attention to the days that have something less than minus 10% out there. So greater than a negative 10%, or you know what I mean when I say that, because greater than a negative 10% says something between minus 10% and zero, if I'm speaking vernacularly correctly out there. But you know what I mean, jelly bean. Now, what you and I know with certainty, not like, hey, it sort of works and, you know, it's fairly reliable or any of that kind of hokey-pokey garbage out there. We know that when we see a one-day rate of change greater than a positive 10%, that there's a buyable bottom that is forming within the next 24 to 48 hours. More likely 24 hours, more likely that very next day. The exception, and we made exception for it because it was such an unusual event, was the trading day of August 8th. Because in the case of August 8th, where there was a one-day rate of change of greater than 10%, it was 10.37%, we were also at new all-time highs out there intraday. And it was a key reversal session, no question about it, but very unusual for that to then, let's say, mark a bottom. It actually was, right? It was a not so much a bottom, but it was a sideways move by the close. However, it was this one that was back into the normal view that we would see on a chart out here, August 10th. All right, so that was on Thursday, August 10th. One-day rate of change of 44% out there. That's where you start going to the shorter term charts and you look for those patterns to form out there. And again, this is different. Shorter term, when you're trading on a 30-minute chart out here, not that it can't form the bottom or the top, because it most certainly can in a larger decline, not like the all-time high type top, and that's where the bear market or the big bull market might start from. But at least from a trading standpoint, you have to really stay within inside that time frame chart. I believe it's best to stay within inside that time frame chart. You look at the other time frames out there to see what other signals might occur along the way to either get you in, stay in, stay out, or stay in, get you out, and so forth. Now, we're back on the daily time frame here for the S&P 500. That's the top panel of our chart out here. When you have and especially when it occurs right around the opposite, meaning a greater than 10%, now you have a less than minus 10% out here. What occurs on a day like today should, in fact, the VIX be like this. It's called an initiation move, an initiation to higher prices. Now, the last one that we saw, and I don't remember what the scare was on May 16th. Somebody out there knows. Z, I'm sure you know whatever that scare was that occurred where we saw the S&P 500 pull back on May the 17th. Maybe that was Russia. Could have been. I don't remember. But what we did see on that day was the Mueller to investigate Trump. See, I knew you knew that. Perfect. Okay. So at that stage here, you get that plus 46%. Then 2 days later, you get the old minus 17% out there. Classic bottoming initiation move out here. What does it do? Goes to higher highs out there. So, if you're still holding on to shorty out there, just be careful. Stay tuned to your shorter term charts and some other levels out here. But just know that this pattern, this green arrow, the green hornet, can I find a failure for you? Of course I can. But here's the deal. The deal is, if you want the probability on your side with regard to what the market is communicating to you, do not be surprised if, in fact, this is the type of negative one-day rate of change we get and the market continues to move higher. Look, the ones here's another one on the trading day of April 24th. You had a nice little initiation. Doesn't say that, it's going to be a blast-off rocket. You're going to Saturn or Mars or something like that. But it does give you a message of higher prices out there. It says, hey, if you're in a short position and you still have some profit in it, you might want to consider booking those profits. You can always get back in. We had two of those types of days back in November 7th. That one-day rate of change, minus 16%. Back on November 9th, minus 23%. You cannot argue that those did not initiate movement to higher price out here. If we take a look at this one that took place on September 21st, really ended up being more of a sideways move out here. So did that one lead to higher highs? No. Was it like a major top or something? Now, that is absolutely not the case out there. So, watch the spot volatility index, beautiful tool out here. When you decide that you're not going to use it as something called the market's complacent or it's not, you just can't trade that. But you can trade these little tools, these little nuggets out here, and there are more, that really can assist you with getting your head in this game and out of the boob tube game and listening to the fact that the sky is falling and all of that type of stuff out there. Just use stops, because anything can fail. But I'm going to tell you, the high percentage, you're in the 80-90%. It's really hard to find a pattern that works with that high degree of probability. But this one does. It's a beauty. It's worked like this for a long time. Okay, I don't see any questions out there, so let's get off of that soapbox. Let's go take a look at, hey, Steve-O, what's going on in light sweet crude out here? So I don't know. Let's go take a look and see what's going on in the world of light sweet crude. We're going to go ahead and put my little synthetic contract up on the screen. Those market profiles are solid, rock solid out here. We're going to see on the 60-minute, that's the left-hand panel. 240-minute, that's the panel to the next of that. And then you've got on the right-hand side the weekly, and wedged in there is the daily. Now, we're seeing red shoots everywhere except for the weekly chart. On the daily chart out here, if light sweet crude is going to hold, it needs to close today above 47.91. We're trading at 47.86 as we speak right now. These are just a few pennies out here. Does it matter a few pennies? Yeah, it's a good guideline. But if it closes fairly well below this 47.91 level, you should anticipate light sweet crude is going to pull back to about 44.29, or at least some type of retracement level that you can watch from the most recent low to high out here. In those numbers, we can go ahead and we can pretty much put those on the screen out here. That says 47.31 is the 0.382, 45.38, 44.01. 44.29. I think that's the sound number if, in fact, light sweet crude continues to trade lower. Steve Rhodes with TFNN. I want to answer your questions, so give us a call. Send me an email. Give me a ping, Vasily. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 144. S&P is up 25. So we were looking at light sweet crude, you and I, just before we went into the breakout here. We'll go ahead and pull this chart up on the screen for you. This is the daily chart. And here's what we know about light sweet crude. We do know that it completed a Gartley sell pattern. Now, it did that when it made that A to B equals CD to the upside. It made it when it did the 1 to 1.272 price projection area. And that was back on August the 1st when it gave us that nice little bearish engulfing candle. So that then was a confirmed Gartley sell. It actually was even confirmed the very next day in candle session. Didn't necessarily have follow through to the downside, but if you and I were to blend those two sessions together, it still was a bearish engulfing candle. Blending is a beautiful thing out there. And so now what that really suggested to you, now did I say go ahead and take the all-out short? I said if you were long, be careful, not necessarily that you had to take the all-out short. Why? Because price kept being propped up by Stevie's red line, that oscillator unchanged line. That was up until the trading session, looks like here on August the 10th, when you have another bearish engulfing session. So we know clearly here, just as a result of completed patterns and candlesticks out there, where the sellers are lined up. Now, on Friday, we saw a second close below Stevie's red line. Today looks like that'll be a third close below Stevie's red line. This brings into play about the 46.75 area, 46.80. Stevie's little green dash line out there. Is this all out bearish? No, it might just be some type of retrace. Remember, every Gartley sell has 5 different outcomes out here. And if we take a look at light sweet crude, let's just punch up the September contract out here. Let's go take a look at what those retracements could be on this pattern. And the reason why I say retracement more than all-out bearish is just simply because its price oscillator is above zero. So, 47.31, 45.39. Again, we talked about these in that 44.02. If that price oscillator gets below zero, a little bit different scenario out here. So that's it for light sweet crude. Looks like we have a caller on the line. Let's go to Denver and speak with Ron. Ron, thanks for calling. Thanks for holding. How are you today?
Mr. Very nice, Steve. First of all, I wanted to compliment you on your call on gold here a few weeks ago, and I put a put spread when GOLD was about 87.5.
Yes.
I sold the 90 puts and bought the 87.5, so I got 95 cents, and bought them back Friday for 4 cents.
Oh, great.
So,
okay.
And that was on your recommendation. And I also wanted to say I tried to subscribe once and I had trouble getting through, and I'll try and call them again and see if I can get that thing going again. For some reason, it wouldn't take when I tried it before.
Well, call the office. I'm not in charge of that. But congratulations to you. It was because of your effort, not my effort. So, congrats to you on that trade. I will share with you that subscribers and I went ahead and closed out our gold long position today. And, I can go through that a little bit later on. But, thanks for the compliment. Much appreciated. Is there something that I can look at for you at the moment?
I just wondered, is Nucor, could it be a buy yet in the steel industry or NUE?
Let's go take a look at it, see if we can figure out what Nucor is doing. Now, you're looking at this for what time period? What is it that you're,
I'm an option player, and I'll buy it. I'll go out a couple of months, but if it makes a move in 3 or 4 days, I'll take it.
Okay. And was there a pattern or something inside of Nucor that had you looking at this? Just so give me a little bit more feel for what you're looking at.
Well, Nucor was up there at was around $68 or so, and it's fallen down to 55. And I know it's part of this infrastructure play if it would ever catch on.
Okay.
And
all right.
And if a guy could be in it when that talk starts, I think the steel's explode, and this is one that's volatile that could give you a good move.
Okay, so in the case of Nucor, here's what we're going to go ahead and take a look at. There was a small little sign of strength by this a small little gap that took place on June the 16th between the session, the high of June 16th, and the low of June 19th. That's the area right now that is being tested. The volume comparison is 4 million versus your about 1.2 today, so it's coming back into a little bit of a small breakout area with a little bit lighter volume. There's a larger breakout area that took place, if you go further on the left-hand side of the chart, on November the 9th. That was big volume. That was 9 million shares, and that's at the 54.23 level. The last time, Ron, that price was down to that area and tested was a swing point that you and I, in essence, just looked at, which was June 16th. So it is a potential buy here, that's for sure. On the options side of it, let's say that today is an initiation move inside the market. That means that the S&P 500 should continue moving higher and the volatility index should continue pulling back. And the better trade setup for you would be for Nucor to get down to this 54.23 level and do it when it's less than 4.7 million shares. And if the volatility index is moving lower, it seems to me like you should be able to get your calls cheaper at that stage. So I would say that the best play for you on this would be to be patient. You're close. That's for sure. But now watch for the volatility index to see what it does at about the 1192 area. Because if the spot VIX index can get inside 1192, what it ought to do is get down to at least 1096. And then, take a look at Nucor again and then try to determine, what you want to do from there. So Nucor is pulling back into a breakout area. Looks like it could come a little bit lower, and maybe that's the better timing for you since you're using options on this. Does that make sense?
Yeah, it makes a lot of sense. I appreciate it very much. And I'll just say that on a long-term basis, you have consistently been right when everybody else has been calling, the end of the world and so forth like this. And you've just ignored all that and stayed with your signals, and your calls have been amazing.
Well, thanks. I appreciate that. I will tell you, the only high that I'm worried about is going to be that final one. That's the one that's going to be the problem. But there's patterns that should be on our screens when that one occurs out there. All right, my friend.
Okay. Thank you, sir. Thank you. I'll get back in touch with you later. Bye.
Okay. All right. That was Ron in Denver, and we were looking at Nucor. I put it to the weekly chart out here. You see just huge, wide-ranging bar out here, that 26 million. So hopefully it's that 54.23 area that will give Ron a decent entry into that ticker symbol out there. So we looked at this, looked at light sweet crude. I mentioned gold. He mentioned gold when he called. And here's what I'm looking at. Here's what concerns me. And really, you and I looked at this when I went through the thought process on Friday. And at that stage, we stayed. I said, I'm staying. It made sense to stay inside of the gold trade. And you know that I'm a big proponent because of the correlations that are out here between gold and the yen. And so we come back from this breakout here. Basically, the same pattern that got us into a long gold trade is now the one that's gotten us out of that trade. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Ron and I were discussing initially the gold trade that he had on. I mentioned to him, thought that it was certainly appropriate since today subscribers and I went ahead and exited our long gold trade. Now, we may be early on this trade, but this is what has me a bit concerned out here. And you know, whenever you're in any kind of a trade out there, your eyes just automatically need to focus on a prior swing point or a prior couple of swing points out here, and because they act as, they're kind of like a, you know, picture that you're on a track and you're running the hurdles out there. Who are the great U.S. hurdle jumpers? What's this guy's name? Was it Moses? In any event, if you just take a look at those as being hurdles that the market has to jump over in order to get up to the next level, or jump down, you know, over or down below in order to get to the next swing point area, what you want to watch for is some type of bullish or bearish signal to let you know that, you know what, maybe I'm not going to do it on this one. I need to recharge, which in the market can either move sideways or pull back out here before you try to attempt it again. And it was back here on the trading session of July the 11th when, in fact, earlier in the day, when subscribers and I went ahead and took long position in the miners as well as the GLD, we had a little bit larger bearish engulfing candle that had formed. But what we did already have was we already had that key reversal upper resistance, or we had the potential for that key reversal, meaning the high and the low of the previous candle had been exceeded, and as long as it was a one red downtick, then we had a sign that we had resistance out here. Now what we're seeing, we talked about how Friday we had a test, no bullish reversal candle or anything, just simply a test of a swing point. But when we got up overnight, and where we are right now tonight, we have a bullish reversal. We may have two bullish reversal signals. You've got a bullish engulfing, simply engulfing the prior body's candle, and you have a three-river morning star, assuming that we're at least halfway into the session here from August the 10th. I say assuming because I've got a 15-minute delay out here. I don't want to give you bad information, but if you do close halfway into the candle, then you've got, you know, we know where the buyers in essence, are lined up with regard to this currency pair. It will influence, won't tank necessarily, but it'll influence what gold and treasuries do out here. Now, we also want to switch over and take a look at those 4 time frames for because I say I could absolutely be early on this, and I would be prepared to come back in long the gold trade. In fact, if it could cross that hurdle, because the cost to get back in, since we had gotten in at, in essence, the most recent bottom in gold, peanuts, not a big deal to just simply pay for that information. If the Japanese yen is going to continue to move lower out here, needs to take out this 30-minute profile bottom, which is 109.41. Hasn't done that. If it does that, that's going to just simply go ahead and suggest, well, okay, we're going to get down to 109.26, and the daily looks pretty much miserable at this stage, and it could bring into play probably the 108.13 level, which would then be another spot for me to take a look at. Maybe the retracement is over, and gold is going to go ahead and try for that hurdle out there. Or it could be worse. Now, it would get worse inside of Goldilocks if, in fact, we were to see price pull back and get below Stevie's red line out here. That's 1277 and a bit of change as we speak right now. It really becomes a problem in gold. So is that a problem to get just slightly below it? No, not necessarily. But if we put up the gold market profiles, I don't think we did this yet. If we take a look at the gold market profiles, the 30-minute chart here says, if you get below 1281.80, that's a problem. Says we're going to head lower. The 240-minute chart says below 1284.30, so you kind of have a unanimous decision there. And then it would require the last perhaps place for gold to find support would be 1276.90. I doubt it. Not that it can't, but I doubt it. Instead, you were looking at maybe the next buy inside of gold around 1253 to 1255. That's assuming that the yen continues to get weaker out there. If it doesn't, then I got out too early, and we'll go ahead and assess, especially if price can get above that prior swing point out here. Okay, so that's we've covered gold, we've covered the volatility index, we've covered the markets, so to speak, out here. General markets. There's a question inside the den. Apple. So let's put Apple up on our chart here, AAPL. And let me get it going on my other chart, AAPL. Thank you. And if we, so it says, please, is 160 high now? It's 159.87, yes. Is that the right shoulder of a head and shoulder top from August from February 8th, 2014. February 8th, 2014. February 8th, 2014. You're all the way down 2014, August 2nd, August 8th, August 14th. August 2nd. Here we go. August 2nd, August 14th. August 14th. Okay. And August 14th, August 8th. Read there. Thank you. Okay. I don't know. So you're looking at this being your left shoulder right here. We just type in, if we just go ahead and just use a simple. So you're looking at this being the left shoulder, this being the head, and this being, and today being the right shoulder out there. So is it possible? Yeah. I mean, of course it is possible out here. What if since you've already taken a look at that as one possibility, why don't I look at some other possibilities for you? Since I will just simply raise my hand and say, you know what, I don't even use Head and Shoulders. I just use regular stuff to wash my hair. That was a bad joke out there. I'm really not that. I do not consider myself to be any type of junior expert. I'm on the JV team when it comes to the Head and Shoulders patterns. I just have these other ones that seem to work so well that I've just kind of stuck with them. And who was it? Was it Bud Rolfs or somebody used to say that you can pretty much find Head and Shoulders patterns everywhere. It's not that they don't work. Because they do. It's just I haven't mastered, let's say, the head and shoulder pattern out here. But on this chart, what we do know that would assist you in that move if you're looking for a top would be the top of the daily box out here. So here's what we know. Let me make sure that this is the daily. I'm pretty sure it's the daily. Yeah, it's the Oh, yeah, it has to be. It's the only one that I've got on the screen. Wonder how that happened. Because what you've got is you've got a market profile that is, in fact, the market profile here is bearish. It's bearish and bullish. Here's the bearish side. Prices traveling with inside this box. This is a profile that just formed on August the 11th. And we can see that center of the box, that's the middle line, is closer to the top. So 160.49 should be where the sellers are lined up, ready to pick off any bulls out there and push price down to 155.12. Not until you get below 155.12 is it really a problem. Now, we're not even looking at price. We don't need to look at price. We can look at price now, but that is your level of resistance. Likewise, if you get above 160.49, and if you, in fact, go ahead and take out the swing point high of 161.83 with more than 36 million shares, Apple's going to scream to the upside. It's T. Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So 2 more things here on Apple. The chart that you see on my screen is a weekly chart. It's got the A to B equals CD pattern. This has a price projection of 169 to fulfill the 1-to-1. At this stage of the game, you and I would conclude that Apple's going to do more than a 1-to-1. A to B equals CD, and we'll head to the 190.63. So we're taking a look at a little bit longer term. To help us confirm that, if I put this chart out here on the weekly time frame, you're going to see from the lows out here on a weekly basis back in May of 2016 2016. It did make it all the way up to that seventh wave move, letter G, and then goes ahead and pulls back. We are now above that, so we've recycled. You're only in that second wave to the upside. You're above Stevie's price oscillator. So as we speak, you're above all kinds of bearish reversal signals. This says that it wants higher price. That's what the weekly chart says. On the daily time frame, just to go ahead and complete this, on the daily time frame, oh, you're kidding me. Did I just do that? Where did it go? Okay, here we go. On the daily time frame, we also got up. When it made its all-time high, it was doing that by singing in the key of G and got up to that seventh wave. So if price is able to get above that, that's just going to go ahead, recycles, confirms what we just looked at on the longer-term weekly chart out there. Now, I think I can get to real quickly here. Let me see if I can. There was two questions that came in as I went into that last break. One from Phil asking about ticker symbol KEM. What's your view on KEM? Where would you set your targets and stops? Wow. Well, this weekly chart, this is a little rocket ship out here. So KEM, let's put this on the daily time frame. Let's just simply get some profiles up here for you real quickly, and then tomorrow, because I think I'm going to get I think the show ends here in a few moments. Here's what we know. Hey, the daily, beautiful, because you're up above the daily top of the box today, which is 1979. I don't know where you're in on this. Where would you set your stops? You would certainly set this below the low of the daily box that just formed today. That would be below 1661 as we. But Phil, we'll go ahead and take a look at this in more detail tomorrow. And the same holds true for you, Tim. I see you sent in a question. Folks, stay tuned. Your favorite polar bear in mind. David White's up next. Tom O'Brien from 3 to 5. I'll have something pretty cool for you to look at about 3:15. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.